You're one part sales, you're one part mechanic. And you better be either really good at being a mechanic or really good at being a salesperson, because in the middle, you're just kind of treading water. Anybody who says that we're all going to be replaced by AI in 6 months, they're crazy. I might be handing somebody a $10 million mortgage. Do you think that person wants to have a faceless experience? But you still had an underwriter seeing if there was fraud, seeing if there were fake bank account statements, all these things that you really need a human to say, this is bullshit. And I don't think that we trust AI to do that. Apple, when they came out with the first iPod, it was cool, but it wasn't an iPhone 16 Pro. It takes evolution. The better mechanic you are, the better process the customer's going to have.
We've been doing this podcast for over 20 episodes now, and we've brought on top mortgage professionals to give you insights that help you grow your business. And we're going to keep doing that. There's just one favor I ask of you. It'll mean a lot to us if you subscribe to show your support. Now back to the episode. Hey everybody, welcome back to the Loan Officer Playbook, the podcast where we talk about real insights and strategies in loan origination. Today my guest is Dusty Lloyd. I am very, very excited for this conversation. Not only is Dusty an Addy AI user, but we both have very similar backgrounds. We studied computer science, and we both now work in loans. So, Dusty, welcome to the conversation. I'm excited to have you here.
Thanks for having me. I've been playing around with Addy for about a month and a half, 2 months. So I'm excited to chat with you about the mortgage business and where you're headed, where this is headed, where Promise Mortgage, where I work and co-own, where we're headed to.
Awesome. Dusty, tell me about your background. How did you get started in loans? How does someone become a loan originator, chief growth officer from being a computer scientist?
That's a great question. So 2 weeks before I graduated from University of San Francisco in computer science, I was going to be a software engineer. I was getting ready to go to this little startup called Google to do an internship in 2000. I got meningitis and it scrambled my brain. I forgot most of what I learned. It was pretty serious. And I started having seizures and spent the next year relearning what my thesis was about and finishing that whole project. And by the time I was done in 2001, I'd go to entry-level interviews and there were guys who had shipped software for 10 years at Microsoft or ran SQL servers. And I'm brand new. I just got out of college. So it wasn't really the greatest time, especially with that whole trajectory. And I say it's the biggest gift because I got into the mortgage business. I've been able to bring that engineering and logic and reason to what a lot of people want to make into a sales job. And I like to think that the mortgage business, you're one part sales, you're one part mechanic. And you better be either really good at being a mechanic or really good at being a salesperson, because in the middle, you're just kind of treading water. And so I have a lot of opinions about what it means to be a good loan mechanic and a good salesperson. And I helped grow a company called Prospect Mortgage. While I was there, we went from just being a purchase focus to being the #1 renovation lender in the country. I helped grow New American Funding from a little mom and pop shop in Irvine to I think I trained 700 or 800 loan officers and opened regions and branches all over the country. And at Promise now, I'm in charge of bringing people on. We're hiring 3 to 5 people a month. So I put them under my wing. We start doing loans. Last month I did about 8 loans. We hired 3 people, so I'm helping bring them on, bringing on my own loans. The market is heating up, so people are really trying to figure out how do I make the most money in the mortgage business, and we're right here to help position them for that.
I love it. One thing you mentioned is it's part sales and part mechanic. How much of it is sales and how much of it is being a mechanic?
That's a good question. There are guys that are construction loan guys. They're mechanics first. They get the leads because people know they can take it to them and they can pull apart a problem and make it into a simple thing. The rate doesn't really matter because it's all about service. And then you get somebody who works in a call center that is selling rate. They're just a sales guy. You look at companies like Loan Depot spent hundreds of millions of dollars to create their system to make it so you can go from being a bartender to being a loan officer in a month worth of training and not really have to understand how the mortgage business works. And then just a processor takes it the whole way forward. And Better took it, I think, another level and tried to use their Tin Man AI to really make it so you could do huge volume without a lot of experience. Just letting the customer self-service their own terms. It's easy to do on a refinance. They've had quite a tough time of trying to figure out how to do that with purchase. It's not like ordering a burger from a kiosk. And when you're doing renovation loans, you're doing construction loans, you're doing non-QM loans, like you have to be a good part mechanic. And the better mechanic you are, the better process the customer is going to have.
Yeah. I don't want to gloss over your background, but I think you have some of the most interesting backgrounds in mortgages. We talk to a lot of loan originators all the time. And one thing I do remember is that the first meeting that we had, one of the first use cases that we were going through, it's like this one person that had like 9 businesses, and then it was like a very complicated file. And then you really spoke to how complex the process was, but also just like simplifying it in terms so that you say, oh, this is how an AI should have solved it, or this is how I would like an AI to solve it. And then I looked at your background, I was like, this guy is a freaking engineer. No wonder he thinks very systematically. It's very impressive to see that, you had a health condition before, and then you were able to overcome it, and now you're working in mortgages and have all these different backgrounds. How has the industry changed from when you started in 2000 to now?
Yeah, so I started 2004, and man, I was just thrown into a boiler room, and they gave me 2 leads a day and told me I had to make 250 dials. And so when I was done with the leads that I was collecting, we had a title list, and so I would just cold call people all day long. And 250 dials to people telling me to go F off really tests your gumption. And then on the process side, we had what then Aegis Lending had a real slick system to make it so you didn't really know how to do a loan, but you could structure a loan using their software front end. And after about 4 or 5 months, I realized that I was charging 7 points and making 30 basis points, and the math just didn't make any sense. And so I got further deeper in the process, worked for a purchase shop that ended up getting bought by IndyMac, that got bought by Prospect, and we were using paper files, transboxing them across the country to lenders and shipping paper around, storing them for 5 years, and just seeing the evolution of going to paperless, what should have been the evolution to have somebody take a look at things. And since I've been on the broker space, UWM has their Bolt system that looks through and does OCR to figure out what everything is. It's just not smart enough to do the analytics. And I think that that's where you're getting to. And what I've been trying to code into Addy is, what do I need to look at, and how do I get a computer to do it quicker, faster, and less mistakes than I do on my yellow pad, and then my processor putting it on a SAM worksheet.
Yeah. You talked about what you're using Addy for. I want to dial into that a little bit and talk about in the industry, there's like different approaches. So obviously we've got the Addy approach, which is like give originators agents, and they can sort of like program those agents in simple natural language, and then use it to review files faster, and so they can actually build their agents themselves. And you've got like the UWM model, which is like, let's give the originators a lot of tools as possible. I think the UWM guys call it as like drinking from a fire hose. But when you watch somebody who does loans with UWM, it's like they have 20 tabs open, they have a lot of tools available. And then you've got the Tin Man model, which is like, okay, let's take somebody who's like pretty less experienced, but then we can bring them up, get them all the experience that they need, and can start doing massive volume. When you compare those 3 models, like, do you think all of those 3 things are going to the same destination? But what are your thoughts on that?
I think we're just figuring it out. I don't think that anybody who says that like we're all going to be replaced by AI in 6 months, like they're crazy. Think about it this way, like I might be handing somebody a $10 million mortgage. Do you think that person wants to have a faceless experience? Do you think they want to have to call somebody in India to say the AI doesn't work and I need you to add impounds and do all these things? No way. There's something to be said about loan officers making too much money. Like, you shouldn't be making 2 points on that $10 million mortgage. Like, is that job worth $200,000 for that mortgage? I don't think so, but it's definitely not going to get rid of the loan officer entirely. And anybody who says that, they're hoping and dreaming, because like even Addy AI, like we're still programming in the logic and what the agents need to be looking at. It's come a long way, and it does most of the analysis for me already kind of out of the box. But I'm excited about where you're going to be in a year and a half. and I can see the vision. It's not Theranos trying to put together a black box. It's more like Apple when they came out with the first iPod. It was cool, but it wasn't an iPhone 16 Pro. Like it takes evolution, right?
It does, and I love that you describe it as like programming. The computer scientist in you is like, I'm programming it, and that's exactly what it is. Like you're building your own thing, your own sort of like worker who's going to do some tasks for you, and then we call the agents like task-based agents because they can do specific tasks for you. And you don't have to be like this computer scientist kind of person. You can just be a regular loan officer that has never heard about agents before and just go into Addy and then program the agents to do anything you want them to do for you.
Like yesterday, I had a bank statement loan, and I asked Addy to go look at all the deposits in his business accounts. The loan store would do a 25% expense factor, and it did all the analysis and the math for me in about 5 minutes for the income analysis. It had done some work before, but said we didn't have Schedule C and all that stuff, so I had to explain what we're doing. But it did all the work for me, and that's a lot easier than me pulling up each individual bank statement, looking at the deposits, seeing which ones look suspicious, all that kind of stuff. And it saved me probably 20 or 30 minutes. And that's time where I can be reaching out to to realtors, to loan officers to come work for us, following up with our people who need help.
Yeah. Do you think other originators are scared to use AI and sort of like, not like scared to use AI, but think that they are not qualified enough and that they can mess up what the AI is doing?
I don't think that that's the problem. I think there's a couple of different issues. There's one, if I send somebody's tax returns to Claude or ChatGPT, well, that's a little suspicious. I definitely don't want a public use model without any sort of NPI restrictions to see somebody's tax returns. Like, first thing, I don't want to be involved in that. Two, a lot of loan officers don't know how to compute a SAM worksheet. They've never picked up a Fannie Mae SAM worksheet and done a self-employed borrower's income, let alone somebody who owns like that file 9 businesses. So they don't really know what to ask for. So that I think people who have that kind of engineer's experience can train Addy, and you guys can evolve with it as that logic goes into the system.
Yeah. We've seen people like, especially when you say they don't really know what to ask for. I think that's a problem that cuts across all AI because I remember when Cleverbot, this was one of the first sort of like NLP models, like back in like 2016 or something. And then you just have the thing that you can chat with, but you're like, what do I ask? And it's like you have this sort of like potentially God-like thing. It's like, okay, if you meet with God today, what would you ask God, right? It's like, I don't know. Like, I'm probably going to ask some stupid questions.
Yeah.
And that's the problem with AI. It's like, what do you ask? How do you think vendors should think about helping LOs and mortgage professionals adopt technology?
That's a great question. I think we're all still trying to figure that out. Addy is like having an Uzi. You got to give everybody an Uzi and see if they can shoot, and then figure out how to aim with precision, and it takes time. I was listening to the CEO of Anthropic on a podcast, and he was saying the biggest problem they had with Claude Code originally was that people didn't understand how to tell AI what they wanted. So they'd say, solve this problem to do X when you get Y. And what it really became is, what is an X? Define that, let your AI agents go and figure things out and tweak through it, and then give them instructions on how you want the solution to be, and then give instruction about how you want it to be fixed so that it works better or solves some problems. And I think that we got to figure that out in the mortgage business. Like, if I just say do the income for Joe Schmo, well, that's different for a bank statement borrower. That's different for somebody with 12 businesses. That's different for somebody who's a W-2 borrower. And AI will get smart enough to figure that stuff out in a few years. But like you're saying, in 2016, we didn't even understand what AI was. So to ask those kinds of questions was outside of our realm. As a user, we just got to figure out more, what is the conversation? How do I get these problems solved and explain what the problem is? And hopefully this time saved will get people who are just salespeople to learn the mechanic part and better understand what their next role is, which is telling AI what you need.
Which people should we get more involved, like the salespeople or the mechanic people? Like, yes, like both roles are important, but as you see the future loan officer, what does the future loan officer look like? What does their profile look like?
So You have better hiring people in that model that it can slowly replace most of their work. And that's one side. The mechanics are going to be more in need because as complex files get more complex, either products will come in to replace that complexity, or it's just going to be difficult. And somebody who is an engineer or has that mindset, an accountant, needs to do all the busy work. So construction loans, renovation loans, difficult transactions with people with bad credit, those kinds of things are not something that's just, do you want it? Okay, let's move forward. It's more complicated than that. And so I think you'll see those mechanics get more useful in the sales process on a purchase loan and on these more niche complex products like hard money loans, private money for probate, trust, working through divorce situations that are difficult, where you really need to know guidelines, and you also have to be able to go on a Zoom call and give somebody a big bear hug and say, we're going to get through this together, right?
Yeah. I can see like a few loan programs that are so easy to underwrite, and then you can get somebody who doesn't understand much, some refi deals, potentially DSCR too. You could put that in that same category, much easier to underwrite than other types of deals. And then you can say, well, I'm only going to do these type of deals and then sort of like eat the market. But from it's like everybody else is building, like not only Better is building, I think like a lot of people are building, but that hasn't truly sort of like trickled down into like the entire like environment of mortgages. Like Better still, I don't think their market cap has like 10, 20x. Like I think the market's still pricing that out. When should we start seeing these technological like innovations trickle down into the public markets, private markets, such as the broader American economy?
That's a good question. And my old CEO, she said that we should have all done our loans at Better during the downturn because they lost money through the most profitable time ever in the mortgage business. So their technology didn't do anything for profitability. And I think that it'll take a shift where, from a company standpoint, you can rep and warrant that Addy is going to give a loan product to Fannie Mae and Freddie Mac that is 100% bulletproof. And you'll guarantee that with insurance. And I know you want to do that. That's probably your goal. But to get there is a Herculean task. It's like Theranos. They wanted the technology to reach up to the vision and the dream. I just don't see that happening anytime soon. And until that happens, until you can get rid of the underwriter and have the AI do the LOA's function, the processor's function, and the underwriter's function, you're not getting rid of the salesperson, and you're not getting rid of that whole infrastructure that's needed to manufacture a mortgage from somebody's interest.
Yeah, I don't think the tech actually is the differentiator. People do have tech.
Clues had it in 2006. Like, Countrywide had it all dialed in. When we were at IndyMac in 2007, it was, what does EMIT say? And they would just underwrite to EMITs. But you still had an underwriter seeing if there was fraud, seeing if there were fake bank account statements, all these things that you really need a human to say, this is bullshit. And I don't think that we trust AI to do that. And we shouldn't anytime soon. I think that we still need a few years of learning to get there.
Yeah, you still need the human review, and the human has to be like chiefly responsible for the loan, so humans are safe. And the record, like you can't have like an AI agent with an NMLS ID, right? A lot of people do like to use that analogy, but I think like you can have one human that is the originator of record and have their NMLS ID tied to like a bunch of loans. Like a few people have tried this model before, like Open Door. I'm not sure how that works for them, but you make a good point. The human still has to be involved in terms of reviewing. It's like, how many of these loans can the human review over time? What's the biggest thing you think AI is missing right now?
It's a good question. I'm still so new into this that I don't know what, like my buddy was using Claude, and he says he just throws the spreadsheet. He's got like this online database and tells it what it wants and where to pull from where to do data enrichment and all these things. And that kind of got my head spinning about what we can use these things for and what these agents can do for us. What I would like to see is it to do first pass reviews of everything, so that instead of like my processor spends 45 minutes to an hour putting a file together before submitting it, and I would like to see that take her 10 or 15 minutes, because I have that Addy report in there. And I'm not sure if we're there yet, but I can see that being 2 or 3 months away, and I'm starting to feel more confident in that. As far as for the overall industry, like I know that Palantir is sending missiles to targets using AI, and that's sketchy. Like there are very complicated things that I can't wrap my head around, and I hope that we see all those things go smooth and bring intelligence out to the world, just like we got Teflon out of the space program, and all these other things that came from military research. I'd like to see that proliferate and us to get just better understanding of things and better agents.
It's the recurring theme, like you said, your head's spinning. I think everybody's heads are spinning. There's so much to do.
But the story I tell, like when I was at a prior company, we did human reviews, and there was an AI company that would do the review of a file and give us a rep and warrant against mistakes. And we found enough mistakes that we didn't trust their rep and warrant for them to be able to have enough capital and insurance to be able to solve for that. And some other competitors didn't care, and kind of saw the results of that. So I think that until you have that kind of certainty where Fannie Mae and Freddie Mac are like, yeah, we don't care, we'll take AI, I don't think that's anywhere close. We still need human beings in the mix, and I don't see that happening in the next 2 or 3 years.
Yeah, I don't think reps and warrants are important if they are wrong most of the time, and even if like Fannie and Freddie like accept it, at some point when the human reviews it and the human challenges that, hey, this is wrong, then if the human does not have enough confidence in it, then it doesn't mean anything.
Right. Yeah, and you have to know that like the borrower lives in New Jersey but works at Walmart, and the home office is in Alabama but works at a local office. Human can understand that little nuance versus somebody who lives in New Jersey, works in New Jersey, but is buying a house in California as owner occupied. Like finding that kind of smell test is something that needs a human, and we're just not going to get AI there anytime soon.
Dusty, I have enjoyed this conversation. What's next for Promise? I know you're building this new company. You guys are killing it. What are you looking forward to?
Yeah, so it's been open for 3 years. I came in about 6 months ago with Kirk Redding, who's the founder. The goal is just to give the company doesn't take a whole lot of money from the loan officer. You look at these big retail organizations where the loan officer is getting like 30% of what the total revenue is. We're just taking $9.95 and 5% of the commission and putting the loan officer in the front seat with good processing so they can go out and be confident to sell. And we had a loan officer up in Bend, Oregon that went from doing 2 or 3 purchases a month to doing 10 to 12 loans a month, and his paycheck added an extra 0. So we're trying to find more of those success stories, and we're getting about 3 to 5 loan officers a month that have interest and want to come on board and get set up and really feel the broker model, the flat fee model, and earn more money and be more in charge of the way things go rather than having to ask somebody in Chicago for a pricing exception that gets you from making 30% of the transaction to making 50% of the transaction, which is just nonsense.
Yeah. That's an incredibly powerful and unique model. And congratulations on all the success. For LOs listening to this, mortgage professionals that want to reach out to you, how can they get in touch?
Yes, Dusty Lloyd, DLLOYD at promiseloans.com. 949-371-5363 is my cell phone number if anybody wants to talk and compare notes. I've talked to retail loan officers, and we've compared their pricing and how great Arrive is, and I've shown them Addy and pulling everybody's documents together and doing what took me an Encompass and a yellow pad 2.5 hours to put a file together to what takes 10 or 15 minutes of work. And really I can focus more on the sales process than the minutia of clicking here and having another and Addy giving her a book report to my LOA so that I'm not stuck in that work doing an analysis. It does everything for us.
Appreciate you. I will echo that same sentiment. Definitely reach out to Dusty. They're doing amazing stuff. Dusty, thank you so much for coming to the podcast. I really appreciate you, my man.
Thanks for having me on.